Hello, everyone. It is Paul Feldman from Insurance Newsnet, and I am here with Tim Heslin from Corebridge Financial. And I'm really excited to be here today. You know, life insurance to me is one of the most important things that people can buy, and yet there's a huge coverage lag in the marketplace. You know, how do you feel like we can cover that gap as an industry?
Great question. On the coverage gap, it's two sides of a coin. The one side is there's not enough people that have the coverage. The other side is there's a tremendous opportunity for those of us in the life insurance market to have people obtain more coverage. And I think one of the biggest opportunities there is with the younger generation, the Gen Z, the millennials. But we have to change the process to acquire insurance. It's a decades old process. The technology is there, and that's what's really exciting is we're at a point in time where the technology can be utilized in order to improve the overall process. It can look much more contemporary. It can be much more streamlined. The products can be quite simple to go through it. And I think all of that is a combination for people to feel really comfortable with what they're purchasing. And the last thing I would say with that is it's not enough just to look at all of this on your own. I always encourage someone to work with a financial professional. Everyone has a very unique circumstance. There's no one size fits all package that could be pulled together. So that's where the financial professional can really go in and add value to help you know exactly what product to buy, how much coverage to purchase, and then steer you down one of these paths that can really accelerate and simplify your purchasing process.
Yeah. What are some of the benefits you see that you guys offer that other companies don't?
So we have a really diverse product set at Corebridge Financial. It ranges all the way from term to indexed universal life insurance. And one of our hallmarks on term is a lot of carriers in the industry offer 10, 15, 20, and 30-year term. Well, what if you don't need 10, 15, 20, or 30-year term? You need something in between. You know, maybe you're 48 years old and you're buying until retirement. 20-year may not fit, and then you're going to overpay for that insurance, or you're not going to have enough coverage if you go to the 15. So we have coverage options that go every year from 15 to 30. And what that allows is someone to customize their term insurance to fit the plan exactly as they need. I would say one of the biggest things on our index universal life side is we build products that are designed to perform in different economic cycles. So what sometimes you can see is a product that might do really well in the current economic cycle, but if you shock it, it doesn't perform as well. We want to build products that drive the maximum value across different economic scenarios for our customers.
You know, I go way back in this industry in multiple positions, and American General was one of the first companies to come out with an IUL.
Right, we were. I think the IUL launch predates my tenure with the company. I joined in 1999, and we were definitely unique in the industry. We saw that as a great product before a lot of other people saw it as a great product. We built the expertise in that line of business, having been in it for over 25 years. And so because of that, we think it gives us kind of an edge on some of the other competitors when it comes to designing our products, know how they'll perform historically, setting appropriate cap and par rates that will be able to sustain the test of time. And so, you know, with that, we think we're driving huge value for our customers, and our financial professionals that we work with every day definitely see that as, you know, we're one of the leading companies selling that product in the marketplace.
Yeah, I mean, IUL's come a long way. It was just like a little side note for a while, and now it's number one UL product.
Right, it adds, I mean, tremendous value for the end consumer because, you know, the fundamental premise of an IUL is you get the upside participation in the equity markets without the downside risk that you have in a VUL contract with the floor that's in there. And in the current economics environments where the stock market has been relatively volatile, historically, the interest rates have been low, that was an extremely attractive product. We'll fast forward the tape to now where interest rates are a little bit higher. The equity markets, are still a little bit bumpy. We're able to take some of that extra interest rate that we have in the base pricing, put that in to create even more value for customers. So what you've seen is, a lot of really cool innovation on the IUL side, new indices coming into the market to give individuals choices. And that's why it's become absolutely a premier product in the industry.
What kind of movements are you guys making on the different indices? Are you just S&P, or are there others that you're working with? Or
right. So we've made a number of index choices over the years. As you said, we were a pioneer, and it was just S&P 500 back then. We've had multiple index options. They're called rainbow options that gave you exposure to worldwide indices. Predominantly what we've moved to today is S&P index options. And then we'll have cap and par on these options because we want people to have the choice of whatever type of investment style that they have. But something else that's become very popular in the market today are what's called volatility control indices. Yeah. And what that allows someone to do is still participate, but maybe without quite the volatility you might get with an S&P option. And so what we tend to see is people might mix and match these options within a contract. Maybe they put half their money into an S&P option and the other half of their money into a volatility control option in order to create a little bit of a hedge and diversification within the product. And that's really where the market has gone to, is giving people more options inside of their index universal life contracts. And I think that's another reason that there's been such a surge in sales.
So we talked a little bit about AI. How do you see that affecting product design and underwriting and service and all the other stuff in between?
I think for our business, the very first places it will be utilized are in underwriting. With that, there's a lot of data that comes into the underwriting, and you need data in order to make these models work. And so with that, you can build a data set relatively quickly, particularly if you're issuing a lot of policies like we are at Corebridge Financial, and bring that in and create an engine that will then be able to automatically underwrite your policies. And that's where we're at today. We leverage AI, and as of March 31st of this year, we were over 60% of our policies were being auto decisioned with the help of algorithms. The one thing I will say, Paul, is we're also a very highly regulated industry. And so we need to make sure we're doing this right. And so there have been regulation that's come out, most recently from the state of Colorado. And we really built our program with an understanding of where we thought the regulatory bodies were going to go, because we wanted to do it the right way. And so I feel very proud of the way that we built our program, with a focus on treating customers fairly, and that we can feel comfortable with the outcomes that are coming from the model.
So we talked about AI from a carrier perspective. How do you see it on an agent perspective, affecting their business or enhancing their business?
So what I think from an agent perspective, it gets to this speed and the technology and the simple process and all of that they can leverage that in order to transforming their business. So, where time might be spent today with paperwork or working through to get an underwriting approval, just think if, that were taking 30 days and an agent's not working on it every day, but if we can scale that down to 30 minutes, they can transform their practice to more on a selling, recruiting type basis in order to help more people become secure and have the financial security that the products provide. I think that's what's going to transform from an agent perspective.
Regulation is always a concern in this industry, especially there's a lot of talk about IUL illustrations. What are your thoughts on that?
So IUL has gone through a number of iterations of illustration changes because there were some designs in industry that didn't necessarily fit within the current regulation well. At Corebridge Financial, like I said, our IULs are designed to perform in all markets. So we were largely not impacted by any of the changes in the regulation. We were able to keep our products as is. And so what we've seen through the iterations of a regulation change, the marketplace has come back closer to where we've always been because we held steadfast in the value that our products bring to our end customer. And with that, we see it as an opportunity for us to sell more in the marketplace with the regulation changes. So we've been very pro the changes. We think it helps consumer understanding with the products. And in the end, everyone will be happier if there are no surprises. It's really important to stress test your illustration because there can be kind of what I would call the baseline assumption that just comes out of the regular system.
It's a good idea to ask your financial professional to run it at an alternate rate. Maybe if it were 6, cut it down to 4.
Something that's materially different so you can understand how the product performs in that different scenario and see if there's maybe more risk or you're comfortable with the risk. That if it weren't to perform at that higher level and it performed at something less, what's that do to your product? And is it still meeting the needs that you have? And what that allows you to do is better manage that product as it goes forward. The one thing we know is the exact illustration is not what's going to happen in reality. And so being better prepared under alternate scenarios is really what's going to make sure that you're satisfied in the long run.
So if you could give an agent any advice today, what would you tell them?
What I would say to an agent is the industry is changing. Technology is coming. The technology is going to make the process better and easier. Embrace the technology. Learn how to utilize it. It's going to benefit your agency. And with that, think of all the benefits that it brings to your customer base. You'll be able to service more customers, which is great. More people will have protection. And that's really what we're all here to do. It's about securing families, making sure they're financially protected in the event that a very unfortunate outcome occurs for them.
Well, I'm really excited about where you guys are in the marketplace, where you're going. Your future looks bright. Thank you so much for your time.
Paul, it was great to be here today and looking forward to doing it again at some point.